The 20th century had oil. The 21st century has chips, what we call semiconductors. They're everywhere, in our phones, in our cars, in our appliances, even in our weapons. Modern life is simply not possible without chips. But like oil, not every country makes chips. In 2021, India tried to enter this market. The government announced an incentive program to attract investors. How much money are we talking about? $10 billion. But the program had a drawback. Companies only had 45 days to apply. If they did not make the deadline, they wouldn't be eligible. The result? There was only limited success. So now the government is reopening that program, this time with a tweak. The 45-day window has been removed. Companies can keep applying until the $10 billion are used up. Technicalities aside, what does this move signal? That the government is keen on chips. It wants to insert India into the global chip supply chain. And what does that look like? Well, you can divide the chip market into three parts: designing, manufacturing, and assembling. This process is not centralized. It's spread across the world. Virtually all of the chip designing is done in the United States. These designs are then manufactured elsewhere. Taiwan, for instance, is a top producer. It makes up around 50% of the market. South Korea is second with 17%. Japan is third. China is fourth. The final step is assembling these chips. In simple words, putting them inside devices. And this is where China is miles ahead. They have more factories, so they assemble more devices. But that's not where the real money is. If you want the big bucks, you must either design or manufacture. That's where the skill is, and by extension, that's where the money is. So how big is this chip market? Around $570 billion today. By the end of this decade, around $1 trillion, and I would say that's a conservative estimate. So the potential is immense, which is why every country is rushing to capitalize. It's the new gold rush. But where does India feature in this race? In 2021, the government was very ambitious. It was expecting at least a dozen chip factories by 2024. Safe to say that's not happening. But one major deal has been signed. Taiwan's Foxconn and Vedanta are setting up a plant in Gujarat. The project is worth $19.5 billion. It's a good start, we say. But the key is to build on it. As of now, India's chip market is worth around $27 billion. By 2026, it could be $55 billion. So the industry is expected to double in the next 3 years. Some factors do work in India's favor. Number one, abundance of skilled and affordable labor. That is key to dominating the chip industry, especially when it comes to designing and assembly. Number two, the political climate. You see, most countries are concerned about Taiwan's dominance in chip making. If China invades, that market would collapse. So there is a global push to diversify, and India benefits from that. The US has already offered support for India's chip industry. In March, both sides signed a memorandum of understanding. It talks about supply chains and partnerships. The Quad also announced a supply chain project. It was unveiled in 2021. It hasn't really moved forward. Factor number three that adds to India's advantage: India's local demand. We are talking about the most populous economy in the world. So a lot of these chips and devices will be consumed locally. Those are the advantages. But there are challenges too. The biggest challenge is China, of course. Beijing also dreams of dominating the global chip market. They have a head start. They also have a bigger checkbook. China's chip market is worth around $192 billion, which is 7 times the Indian market. They're also readying a new package. It's worth around $143 billion. My point is, China will always outspend India. That's challenge number one. Challenge number two is the nature of the market. It's almost like a cartel. Hard to enter, even harder to leave. If India signs on, it could become stuck in a US-dominated grouping, and that could mean a lot of conditions like labor standards, green targets, anti-corruption measures. India has always preferred setting these itself. So will it be comfortable inside a chip cartel? Well, that's a question for the government to think about. Either way, one thing is clear: sitting on the sidelines is not an option. If it's not possible to match China's spending, then New Delhi must focus on other strategies, like creating chip alliances or leveraging its ties with the US and Japan. It must also think about what role it wants to play in this market. Reports say the government is keen on manufacturing, but that's a tough sell. You see, making chips is all about staying ahead of the curve. At the top, you have cutting edge. At the bottom, you have trailing edge. Taiwan and South Korea closely guard the cutting-edge technology. So should India invest time and money in manufacturing? Or should it focus on designing? All of these questions will be key to India's chip project. We'll be watching.